With the recent rise in inflation, decline in the stock market and GDP, the global economy is in a turmoil with many fearing that a recession is imminent. According to economists, as of October 2022, there's a 63% chance of a recession within the next 12 months. Now, I'm sure part of you is panicking thinking, will I survive this recession? How can I position myself better to cope with these economic hardships? Well, before we go any further, let's quickly understand what exactly a recession is. The NBER, that is, the National Bureau of Economic Research, defines a recession as a significant decline in economic activity that is spread across the economy and lasts more than a few months. Another common indicator of recession is if the GDP is negative for 2 consecutive quarters. But what does it mean for an average person? How does it affect the common man? A recession results in low consumer spending, and accordingly businesses get affected, which then results in things like job losses, reduced work hours, pay reduction, fewer pay raises and bonuses. It also becomes extremely challenging to find a new job as companies are reluctant to hire. In short, for majority of the people, their livelihood gets heavily affected, and especially if you're living paycheck to paycheck wherein you hardly have any savings to help you during hard times, you might easily end up in debt. And if that's not enough, such financial stress often leads to sleeping problems and mental health issues such as depression. As a whole, for an average person, a recession can have long-lasting adverse effects on all aspects of their lives. But while recessions are scary with its declining wages and high rate of job losses, there are those in minority who look at it as an opportunity like no other to build their wealth. In fact, many experts do claim that a recession is one of the best times to maximize your personal wealth. And in this video, we're going to show you how you can best position yourself to take advantage of the opportunities that come during a recession. So keep watching. But before we continue further, if you've enjoyed the video so far, do consider subscribing to our channel at LAM, where we discuss all things life and money. We're constantly working to upload informative and educational videos to help you guys better your lives. Number 1, invest in stocks. During a recession when the markets are falling, many investors panic and sell off their stocks to stop losing more money. So first and foremost, don't panic and sell off your stocks. The most basic fundamental rule of investment is to buy low and sell high. And more often than not, we do the exact opposite when there's an economic downturn. Now, it's understandable that you're looking to minimize your losses by selling your investments to get some cash to aid you during the recession. But a better strategy would be to shift your portfolio from cyclical stocks to defensive or non-cyclical stocks that are well-positioned to weather a recession. Shares of well-established companies in sectors like healthcare, utilities, consumer staple goods, fuel, and food are common examples of defensive stocks. General income stream of such sectors remains stable even when the market fluctuates. But be wary to not just buy any defensive stocks. Make sure you do your research and buy from companies that have healthy margins and strong cash flows. Now, apart from managing your existing portfolio, an economic downturn provides a solid opportunity to buy new stocks, which are now available at cheaper rates. For most wealthy and rich people, it's their favorite time to buy stocks, kind of like a Black Friday sale for buying assets. Now, for the average person, the relatively safer bet would be to invest in ETFs, that is, the exchange-traded fund, that provides you with diversification among companies with solid fundamentals and balance sheets. Of course, you stand to gain more from individual stocks that may collapse in value during recession but are poised for significant gain post-recession. Having said that, the risk is also far greater when picking up individual stocks, as the company can easily go bankrupt. So, unless you're a seasoned investor, it's better to focus on ETFs. It'd also be wise to use the dollar cost averaging, or the DCA, as an investment strategy. With this strategy, you reduce the impact of market volatility by investing small fixed amounts at regular intervals, typically monthly, instead of investing a lump sum all at once. As a general rule of thumb, the dollar cost averaging is most effective during a recession or economic downturn. Let's take a look at a short example to get better understanding. Let's assume you invest $100 every month into ETFs, and in the 1 month, you purchase 25 shares at a price of $4 per share, and over the next 6 months, the share price goes up and down as listed in the table. But by the end of the 6 months, the price of the shares increased to $5, and you've purchased a total of 195 shares at an average price of $3.10. Now, if you were to sell these 195 shares at $5 per share, you stand to make a profit of $375 against your investment of $600. Whereas if you would have invested $600 as a lump sum, you would have only earned a profit of $150, which is less than half of what you made in the dollar cost averaging. Now, bear in mind, this strategy will not always be profitable, nor will it always safeguard investors from falling share prices. In fact, in a rising or bull market environment, DCA will actually be less profitable, but since we're focusing on recession here, dollar cost averaging will help reduce anxiety and build up your wealth over time. Number 2, real estate. During an economic downturn, investing in real estate can offer some stability and potentially lucrative opportunities to build substantial wealth for smart investors. A considerable amount of people have become wealthy after the crash of 2007 to 2009, as they started buying real estate at heavily discounted rates. Now, why is that? That's because if history has proven anything, it is that despite several recessions, real estate continues to appreciate in value. But even if there is a housing market crash, it's still great news for investors as it offers opportunities to buy potential properties at discounted rates. Also, it's advisable to invest in residential property. That's purely because it's basic need. People will always need a place to stay. Housing is always in demand regardless of economic situation. You might think that perhaps commercial properties will give you better returns, but majority of the businesses are in decline during a recession. So it's better to invest in residential property. The more units you can rent out, the more rental income you can generate. Furthermore, real estate is much more stable and has low correlation to the stock market. So while stocks get easily affected by economic turmoil, comparatively, there's little effect on real estate. Plus, since real estate is a physical, tangible asset, you can even put it to use if the value decreases. Number 3, invest in gold. For millennia, gold has been a valuable commodity because of its scarcity, and diversifying your portfolio with this valuable commodity is a smart move. Not only because it gives stability, but it provides hedge against inflation. In short, buying gold is a good way to safeguard yourself during bad economic times. The major benefit of buying gold is that it retains its value far longer than most types of assets. Similar to real estate, it also is said to have low correlation to the stock market. In fact, if the stock market declines, gold usually rises. Perhaps one of the main reasons why you must invest in gold during a recession. Having said that, gold can be volatile in the short term, and it generally doesn't appreciate the same as a stock or a bond over the long term. Its major function is to lower the overall financial risk and act as a safe haven for money during economic hardships. Most financial experts recommend investing no more than 10% of your savings in gold. So if you haven't bought any gold yet, now would be a good time to buy some. You can buy gold in form of bars, coins, jewelry, or a great alternative is to buy gold ETF. Or exchange-traded fund, as it will save you the hassle of owning any physical gold, plus it's more liquid than physical gold. Number 4, start your business. The idea of starting a new business during a recession may seem reckless. However, shifting your attention to this alternative asset during an economic downturn can be quite advantageous as you're up against relatively fewer competitors. In fact, some of the world's biggest companies like Microsoft, Airbnb, and Uber were created during recessions. If you can form a startup that provides solutions to some of the problems that the world is facing right now, your business will have great potential to thrive. Again, to give the example of Airbnb, founded in August of 2008, owners Brian Chesky and Joe Gebbia started renting out air mattresses in their living room in San Francisco to get some extra cash during a downturn. When the Great Recession hit, suddenly the need for short-term, low-commitment living quarters exploded exponentially. And today, the company has a market capitalization of approximately $72.4 billion. Now, if you can't think of a way to start a new business, then as an alternative, you can consider buying out a business. Plenty of businesses make loss during economic downturn, and some even face bankruptcy, and accordingly, these owners are looking to sell off their business at a discounted price. This is the time where you can purchase businesses at a bargain of a price and position yourself to earn more once the economy recovers. Also, buying a business is more convenient as you'll already have a customer base, plus a cash flow, and an established place in the market. Of course, you will have to do your due diligence and financial analysis to determine if the company will be a good investment. If you found today's video informative and helpful, do subscribe to our channel for more content like this. And don't forget to leave a like. Thank you for watching, and we hope you guys have a lovely day.